Really happy to have you here with me today, and we'll be talking about the European Central Bank monetary policy, what their plans are, so sit back and enjoy. The European Central Bank is relaxing its monetary policy again. So at the council meeting with far-reaching consequences, it tightened the penalty interest rates for banks and decided to pump billions into the markets via a bond program. Now, the European Central Bank ECB has pulled out virtually every single lever of loose monetary policy in the recent years. So at the beginning of 2019, it stepped on the brakes to some extent. Now the arsenal is being expanded again. These are the decisions of the governing council, and I think it's very important to see what they're going to do. The penalty interest rates, negative interest rates for banks that want to deposit money with the ECB will be increased from minus 0.4 to minus 0.5%. Pretty bad indeed. At the same time, the ECB is introducing a graduated interest rate for certain allowances in order to ease the burden on the banks concerned. I think it's super funny that you have to ease the burden on the banks. Let's continue. The controversial bond purchase program will be resumed in order to help countries get cheaper money and to accelerate inflation, as if you had to accelerate inflation. So at the moment it's too low for the ECB, and in concrete terms the ECB intends to purchase securities for 20 billion euros per month starting from the 1st of November. The governing council of the ECB did not decide on an end date for these purchases, so it's a massive amount of money that's going to be put into the market. So key interest rate will remain at 0% for the time being. They have been at this record low since March of 2016, and the ECB is aware of the negative consequences of their actions, but they're still going to pull through with it. Now, the ECB president directly explained at the media conference that the very expansionary monetary policy would remain necessary for a longer period of time. He did not mention a deadline, but a condition, and the condition is a turnaround is only possible when the inflation outlook is clearly and stably close for the target of just under 2%. And for the time being, the ECB was prepared to use all instruments if necessary, he noted. Now, he said it's also important to keep an eye on the downside risks, especially with regard to trade conflicts and other political risks. So with the euro losing value, that's got a negative impact, for example, on the US trade. The ECB is aware that the very loose monetary policy is having a negative effect on people, especially savers. The ECB president in a discussion with journalists, however, the measures were economically necessary due to extensive risks. So basically they want to push out the financial crisis as far as possible. Now, for the growth forecast for the economy in the Eurozone were slightly lowered for 2019 to 1.1%. Previously, it was at 1.2%. And for 2020, it's 1.2%, and previously 1.4%. And for 2021, the ECB continues to expect a growth of 1.4%. And this weakening of the economy is more severe than expected. And this is an important reason for the further easing of monetary policy. I believe this paints a very clear picture on what direction the European economy is heading towards, not only the European economy, but the global economy as a whole. So hope you're looking for your hedge against the upcoming financial crisis. I know I've got my hedge and I know where. And that's about it. So if you enjoyed this video, then I appreciate a like, and if you want to see more of these types of videos also on blockchain and economy, then hit that subscribe button and the notification bell to stay up to date, and see you on the next one. Bye bye.